So Tony, how is this carrying over to you when you're pre-qualifying a client?
Yeah, so there's two ways, right? Obviously, the higher their premiums are, the more it affects their debt ratio, which ultimately compresses their buying power. The other piece is if you can't get the insurance, then you can't buy the house. So,
Right.
there's got to be a common space there. One of the ways that you can circumvent that is you could do a renovation type of transaction if it did, in fact, need a new roof or new plumbing or things like that. There are some programs out there that would allow you to buy the house and get the work done. And Monica could speak to, and I apologize, but I forget what they're called. Builder. There's some kind of a higher risk. Um, you tell me what it is because I know I'm going to say it wrong, and I don't
Oh,
want to.
it's
I
called
don't want to
it's
do
called a
that.
builder's risk. It's called a builder's risk
Okay.
policy. So yeah.
Okay.
Yeah, to get those things done. But yeah, I mean, you've got to be properly insured. There's not a mortgage company in the industry, private or otherwise, that's going to let you take out a mortgage and not have the proper insurance. One of the things that the mortgage companies require virtually across the board is they want replacement cost estimators or proof of replacement cost coverage on the property so that, God forbid, the house was destroyed, you're going to be able to rebuild that property. So it's
Right.
definitely an issue.
And
Right.
that's the other thing that's happened recently. I'm sure Tony's really well aware of it. Is that we're not allowed to give out replacement cost estimators anymore for insurance.
Yeah.
So we have to somehow satisfy that requirement another way. So that's become another little stumbling block on us, you know,
Yes.
Right.
working with the mortgage company, which
Yeah,
I'm
it's
sure they
almost like one
love.
part of the industry changes and they forgot to bring the other part of the industry into the conversation, and so there's this gap that happens, and they have to they have to realign. So we see that most
Exactly.
companies were able to work through it, but it's definitely something that we have to navigate on a fairly regular basis.
Right. Right. So I know that I've talked to several people that are in the position where, they because we just went through, paying the taxes and insurance and your escrows, and I just got a nice letter in the mail myself about because my insurance went almost double. So now that's a deficiency in my escrow account. So now I have to make up for that so my monthly payment jumped $160 a month.
Hmm.
I don't owe a lot. I've lived very frugal. So for me, it's really not a big deal for that $160 a month. But I'm thinking about the people that have mortgages now of $2,000, $2,200 a month. And some people are telling me that they're jumping up to $3,000 more than the previous year. So you're talking about, a couple of $100, $300, $400 a month difference that so we're not dealing with the adjustable rate mortgage where that bumped it up, but now we're dealing with the insurance. Are you seeing a lot of that, Tony?
Yeah, absolutely. And the property taxes, it kind of you're getting hit from both directions. And what
Right.
happens is your mortgage servicer for your property taxes, if you're escrowed by law, has to pay the taxes in November when you get the greatest discount on your tax bill. But they're still going to have to adjust your account. And what'll happen is even if you didn't have enough in your escrow account, they're going to pay it. And then
Right.
they're going to send you a letter and they're going to give you a couple choices. Number one is you could pay the difference and bring your account back up to, par, if you will. And then they're going to increase your payment no matter what, because they have to make sure that in the year going forward, you're saving enough to make sure that
Right.
you're on track to pay that next payment. So for somebody who doesn't have the ability to just drop that difference, now you're really faced with a really high jump because you have to prepare for next year's premium and make up for last year's
Right.
adjustment. So
Hmm.
it can be really, really impactful. We end up talking to a lot of people about doing refinances. The appreciation has been so great. That's an opportunity to say, hey, can we get rid of mortgage insurance if you're paying mortgage
Right.
insurance? Because of the appreciation moving at such a rapid pace. And you know what? A lot of people still have consumer debt. So it's an opportunity because of the equity to take it, and look at their situation specifically and explore, hey, can we do a debt consolidation so that we can get you freed up someplace else
Right.
so that you can afford to stay in this property and then get your escrow accounts balanced back out again.
Right. Right. Absolutely. Absolutely. Yeah. So there's a lot of things going on all at the same time. We have appreciation going on. We have, the insurance going up. We have taxes. A lot of people don't know how taxes work in the state of Florida, so they buy a home thinking and they're pre-qualified on the current, rate of taxes, and then the next year when it reassesses, they get hit with out of clear blue. I have that conversation with all of my clients, and I got to tell you, probably 80% of them didn't even know that. You know,
Yeah,
they
no,
weren't
you're
even
right.
aware.
So here's something. This is a great time of year to have this conversation. So if you bought a house earlier this year and the seller of that home had either vacated their residency and lost their homestead protection, or their homestead, or maybe last year there was another sale on that property, this year they could be faced with a very substantial hike. And there's a proration agreement that is signed at every closing that
Right.
allows you to go
Absolutely.
back to the seller and get them to rebalance those prorations. So I actually had acquired a property myself this year on the west coast of Florida, and the property bill jumped tremendously because the estate transferred out. They lost the homestead protection. This year, the hike took effect, and it ends up putting another $2,500 back in my pocket because the seller is responsible for that proration. So if somebody out there listening to this has bought a property this year and has seen a tremendous hike, then they may want to pull that out and go back to their title agent and say, hey, here's my tax bill. I'd like you to revisit the proper prorations on
Good
this and see
point.
whether or not I'm due any additional monies.
Good point. Because I hear that at every closing we sit down and listen to, but very, very rarely do I hear somebody going back and collecting. So that's a really good
Yeah.
point to bring out to
Well, you're
people.
overwhelmed, right? You're buying the house. There's a
Sure.
lot going on. There's excitement. There's anxiety. There, you just put yourself into debt. And
Right,
so
right, right.
they walk out, and that to me, I feel like, and I know you're the same way. We're the extension. We've got to be the eyes and the ears and the memory and help guide them and remind them to pay attention to
Absolutely.
these things. Same thing with the homestead. I can't tell you. We remind people at the closing. We also send everybody at the new year
We do
their
too.
closing
Yep.
disclosure, and we remind them to get their homestead taken care of. And I still inevitably will have people that don't do it, and that's a very costly mistake.
Absolutely.
So it's just, as soon as you have that deed, and most counties allow us to do it online, it's really important that people get that done. And if ever you need help, just call any one of us. I know every one of
Yep.
us would be willing to walk them through whether we
Yep.
helped you acquire your property or not.
Yeah, absolutely. Yep. And it's funny. It's funny, but it's not funny because that happened to my own son. And if he's listening out there, I told you, I told you, I told you, do not forget to file for homestead. And he went not 1 year, but 2 years before he filed. And he kept arguing with me about why is my mortgage payment going up because you didn't homestead your property. So finally
Yeah.
this year he homesteaded it, and yesterday he texted me. He's like, Dad, my mortgage payment went down like $300 a month. I said, now you've been paying that for 2 years now. That money would have been in your pocket.
Yeah.
But
Well, the worst
it
part about
happens.
that is he also, because he didn't file it, his
Appreciation.
adjustment could have jumped up
Yes,
tremendously. So he lost the
absolutely.
savings, and he
Right.
resulted in a higher annual tax bill.
Thankfully, it was a small condo and didn't go up that high. But yeah, I mean, people don't realize that every little bit helps. And when you can
Absolutely.
lock that in, why not? I hope you enjoyed that short clip. And if you'd like to see another one, click right here. And if you would like to see the entire video, click right here. Thank you so much for watching, and I'll see you on the next one.